Hi and welcome to Swissquote's daily market talk. It's Monday, May 26th. The trade headlines swing fast these days with the EU threatened with 50% tariffs by June 9th. Now, better news are coming from Japan while no new developments are seen on the Chinese front. And besides the trade news, we will be watching this week a few inflation reports from around the world along with the Nvidia's first quarter earnings. So tune in. We will talk about all that, but before we do, please keep in mind that opinions are my own and this is not financial advice. So the trade headlines start accelerating again, and that's not necessarily a good thing. On Friday, the financial markets closed the week on a deeply bad mood after Donald Trump threatened to impose 50% tariffs on its European imports by June 1st, leading to a sharp sell-off in major indices on both sides of the Atlantic Ocean. He also said that he would slap Apple with 25% tariffs if it did not move production into the United States. So Apple shed 3% on Friday on fear that the company would be obliged to produce its iPhones that it cannot sell for less than $3,000 if it produced them in the United States. Then, this morning, the market mood, the sentiment in the market is sharply better, mind you. The Nikkei index is up by more than 1.70% at the time I'm talking here this morning on hope that the US and Japan are moving closer to a trade deal. Now, note that the announcement last Friday of a partnership, that we don't have the details, but a partnership between the US Steel Corp and Japan's Nippon Steel, a long-standing saga between the US and Japan since the Biden administration, has given hope to investors that the US and Japan are really on to something. So Nippon Steel jumped in Tokyo this morning, though most of the early gains have already been giving back at the time I sat in front of my screens this morning. In Europe, the stocks futures are up by around 1.60% at the time I'm talking here, and the S&P 500 futures are up by around 1%. The US markets will be closed, but the futures are trading. So that's on news that the 50% tariffs on the EU would be delayed from June 1st to June 9th deadline, given some more time to Europeans to negotiate. What is not helping is the Europeans were thinking to be heading into a short trading week, a short business week due to the Ascension Day on Thursday, with most people also having thought that they would be taking their Friday off as well. So yes, the news that the deadline is at least pushed back to June 9th from June 1st is good news, but it looks quite short still for sealing a deal that could satisfy both parties in the long run. So if you did not know, the European Union, when taken as a bloc, is the United States' biggest trading partner. So yes, it's not Mexico, it's not China, or it's not Canada. It is the European Union taken as a bloc. So escalating tensions between the two blocs could easily spur a further sell-off in risk assets on both sides of the Atlantic Ocean, push the US dollar and the US treasuries lower, the euro, the European bonds and gold higher in the coming days, depending on the nature of the news. We indeed continue to see a decent selling pressure, on the other hand, on the US dollar, and that's obviously due to re-escalating trade tensions and the swelling US debt worries. The dollar index is headed toward the lowest levels hit back in April. The euro dollar, as a result, kicks off the week on a positive note, perhaps also on relief that the June 1st deadline was pushed further by a few days. But note that the euro was up against the US dollar on Friday already, when the news of 50% tariffs by June 1st broke. So the euro is acting like both safe haven and risk on currency on trade news these days, which makes it a very interesting currency for hiding during the trade tensions. Elsewhere, Cable in the UK spiked past the 1.35 psychological mark for the very first time in more than 3 years, while the dollar yen is ready to test the 142 level to the downside. The natural target here for the dollar yen bears is the 140 psychological mark, of course, on both a broadly and persistently softer US dollar across the board on multiple US trade and debt worries that we have out there, and also on the back of a strong hawkish BOJ expectation that strengthened last Friday after Japan released a stronger than expected CPI reading for April. In other safe haven assets, gold remains supported above the $3,300 per ounce level on the back of looming trade and US debt uncertainties, while Bitcoin is actually also amassing a part of the capital outflows from the dollar on the back of friendly US regulation and a broader adoption of Bitcoin by big players, big banks. Even JP Morgan, where the CEO Jamie Dimon was outright against Bitcoin a few years ago, will now offer cryptocurrency products to their clients. So the price of a coin is just consolidating below an all-time high level this morning, an all-time high level that was freshly hit last week. Now, this week is an important week for both stock and currency investors. First, major European economies, major Eurozone economies will reveal, among other important growth and jobs and industrial data, well, they will be revealing their May preliminary inflation reports throughout this week, and the consensus among investors, among analysts, points at a slowing inflation in the Eurozone after last month's unexpected uptick. So the euro appreciation may have counterbalanced somehow the rebound that we saw in oil prices in May, and a sufficiently soft inflation reports from the major Eurozone economies will certainly give a green light to the euro bulls for extending their rally potentially past the 115 psychological mark. Then, investors will be watching fresh inflation metrics from Japan as well. The Reserve Bank of New Zealand, on the other hand, is expected to trim its interest rates by 25 basis points on Wednesday. Then the US will be printing its latest GDP update and core PCE numbers to give investors an idea on the health of the US economy. Now, note that a soft GDP report from the US is not the worst outcome for investors nor the investor sentiment if it is not accompanied by rising inflationary pressures. But the problem is the US first quarter growth decline will probably be accompanied by a sharp rise also in price pressures due to the tariff shock, the tariff uncertainties and the tariffs, and that is bad for the Fed expectations, for rate expectations, and hence for equity valuation is something to keep an eye on this week. Then, on the earnings calendar this week, it is finally the Nvidia earnings week that most investors out there wait with great impatience since the very first day of the earnings season. So Nvidia is due to report its earnings after Wednesday's closing bell in the US. Now, remember, last quarter, the earnings from Nvidia were strong. They were actually stronger than expected by analysts, yet sales have fallen just short of the $40 billion psychological mark, and the profit margins continue to be under pressure due to the complications that the company saw in the manufacturing of these complex new generation Blackwell chips. Now, for the first quarter, Nvidia's sales are expected to have finally surged past the $40 billion mark, past the $43 billion mark even, despite a complicated quarter marked by rising trade tensions that Nvidia remained a little bit shaken by, and the emergence of Chinese rivals as well with DeepSeek. And the profit margins may also have remained under pressure. But the backdrop still looks strong for Nvidia because big spenders like Meta, Google pledged to continue to spend big. Then TSMC posted robust earnings in the first quarter thanks in part to front-loaded demand ahead of the new tariffs. And Nvidia recently sealed massive AI deals with the Middle Eastern government. So those will probably show up in the company's forward guidance and they could please investors. Nvidia, on the other hand, is also preparing to roll out a cheaper version of its Blackwell chips, just specially tailored for its Chinese market, but it still needs permission from the US government to sell them to them. Anyway, options markets suggest that the stock price of Nvidia could move more than 7% on either direction after the earnings announcement, depending on whether investors like what they see or they do not. So this is all for this Monday. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.